Alright, what's up, guys? So basically, here we'll be focusing on. Let me just make that a little bit bigger. So this video is about uh, market structure. So as you can see, the video that we're making now is about market structure. So basically, it's to market structure pretty much gives us a clear indication of where the market is headed, where the market is going, what is it doing, and all of those sorts of things. Because I believe that without market structure, you wouldn't really know what's going on, right? So where do we start? First things first. Let's just do this. A market has three directions, right? I'm sure all of us know that, but if you don't, that's okay. You're gonna learn this by the end of this video. So the first direction is um, you have your uptrend, we have our downtrend, and lastly we have our range slash consolidation slash a dash. Oh my god, what did I do? Slash consolidation range, right? So basically the market has those can only move in those three directions. There's no any other way. So let's try to identify the first one. So let's go to a higher time frame first. I don't know which one will give us a clear. Okay, let's yeah, we'll definitely use this chart right here, AUD USD. So on an uptrend, what you normally see is this. You seeing, okay, let me just I think I can just draw this thing for you guys. On an uptrend, this is what you see. So basically on an uptrend, what the market is really doing there, it's making higher lows, it's making higher lows, it's making higher lows all around those areas, and then on the upside we have your higher highs. Oh no, my bad. This is gonna take a little while, so your patience will be really appreciated. So higher highs, we have our higher highs there. So basically this is what we call an uptrend. If you see the market making higher highs and higher lows, that's pretty much that's called an uptrend. And then on the downside we have our downtrend. So this side we have your lower highs. You have your lower highs, lower high, a lower high, and then we have another one there, and then on the downside we have your lower lows, and then you have your lower lows, and then our last one there, and then this is 100% classified as a downtrend. As long as you're seeing this market movement, it means the market is on a downtrend. And then the last and final market direction that we have is we have our range, our consolidation range. So pretty much the market is doing this. Yes. So it's just one pretty much it's just one zone. So you wouldn't say you have a higher high or higher low or anything of that sort, but it's just a low and high. So you can just put a high there, which is H, and then we put an L this side, which is a low. So more than anything, what you'd be looking for is these two directions in the market. For whenever you want to enter in a position or anything like that, you'd be looking for a trending market. Cause with these ones, yes, 100%, you can definitely get. Let's say you can take your sales around these areas, your buys. I mean, because it's also a floor, right? It's a support area. So more than likely, the market might push up, and but you don't know how long it will. Because sometimes what it tends to do in consolidation areas, you might be thinking that these buyers that are buying here will be pushing the market up, but then we just get an influx of sellers around this area, and then instead of the market reversing up there, it just bounces back here, and then it breaks this previous low, and then now you find yourself in a losing position. Or if you have your SL on, which is your stop loss, probably that trade would have been triggered already. So yeah, let's look at a real example of that. So we go to okay, this is not a favorable area, but I mean it will give us what we want to see actually. So this area right here, we can take it as an uptrend. It is an uptrend because it's not doing any of this, right? So now what do we do in a position like this? Let's say for instance you want to take entries around this area here. The first thing that you would do, as you can see, the market was, we had a little bit of sellers. Well, not a little bit of sellers, but just a huge drop of sellers right here. We found some support there. We found the resistance in this area. We had resistance in this area, and then after that, the market dropped. We found a floor. We made a new, found support here. We found a floor there, and then from there we tested this area for the second time, and then the third time, right? After that, we broke this previous resistance area. So that told you what? That the market is now on a, excuse me, it's on an uptrend. Sorry, it's on an uptrend, because you see here, we're having sellers. These are your lower highs. This can also be a lower high around there. and then here are your lower lows, your lower lows, your lower lows, right? So now the market was transitioning into what? An uptrend. So what it did, it first broke certain resistance areas, even these minuscule areas like here. You know, you can also count them as lower lows, lower highs. I mean, so we found an area of resistance with those two candles. So whenever you're going to have, let's say in this example, this is a downtrend, right? And then we have that bullish candle with a little bit of exhaustion there, and then we got a bearish candle with little to no exhaustion. If you can check, if you can check there, let me just mark it with an ellipse. I think it's gonna be better like that. Yes, as you can see, we didn't have any exhaustion right there, so we still had some sellers in this market, so an entry here would have still been valid, right? So you take your sell and the market drops, and then the next candle, it has a little bit of exhaustion. One thing that you always got to pay attention to, but then we'll go into detail with that in when we're doing our candlestick analysis. Yeah, but for context, anytime you're in a position and you start seeing these these wicks or these exhaustion areas, we call them exhaustion areas, but you can call them wicks, whatever whatever you're liking, but I prefer exhaustion areas. You start paying attention to that, because now what it tells you is what it tells you that there's a slight chance that um, maybe buyers are on the way. Buyers are on the way. They haven't really said anything, but they are they are also stating their claim that they're around. What's going on now? Ah, they are also stating their claim, telling you that okay, we are here, but we haven't said anything yet. And then next candle, it's a bearish candle with that small. Well, it's not a really small body or anything like that, but you can see this exhaustion area here. So this is considered as a tested candle, so it's not broken or anything. And then we had this bullish candle. So these two confirmed your bullish engulfing candlestick pattern. So it's a bullish engulfing, and then it pushed, but still we tested this resistance area again. So would this sell be valid? To a certain degree, yes, but then you would have been paying attention to what these other candles forming after your these two candles. You know, you would have been paying attention to what are they doing. So what we did there, we made a lower high, a higher low. I mean, our first higher low, that was it there, right? And then these candles broke through this resistance area, and then from there we made a new resistance area. But would you consider this area like a higher low or anything like that? No, you wouldn't. So it's pretty much a consolidation range right here, or whether you call it consolidation, whether you call it a range, it's up to you, you decide. But then we had a consolidation area. Breaking it down to lower time frames, you would have seen what caused all of this commotion to, you know. And then from there, we made this new resistance area. From that, sellers came through. Would your sell entries be valid? To a certain extent, yes, if you know how to break down the market to its fullest potential, then you would have gotten an opportunity to take a sell there, right? And then we came back to test this support area. How many times? Let's say it's 3 times, right? Um, tested, we tested, and then we tested it again here. So you wouldn't consider any of these a higher low or anything like that, but just a low. Like I said, whenever we're testing an area multiple times and it's not really breaking, it's not really a higher low or lower high, it's considered a high or just a low. At this point, it's just a low. So we tested. A buy would have been valid, a buy would have been valid there, a buy would have been valid. So I hope each and everything makes sense, but it's not rocket science. It's just simple. It's a matter of looking if the market is making your previous is making highs and lows. You understand? It's just as simple. Is it breaking previous lows? Is it breaking previous highs or anything like that? And then like that, it will give you a clear direction of where the market is actually going. So with with market structure, really, it always depends. By the way, in terms of what let's say what instrument you're trading, some instruments like this one, the chart that we're on now, which is AUD USD, it can be that your market structure is smooth on, let's say, um it's smooth on H1, right? In some instances, like let's take GBP USD, let's go to H4 candlestick time frame. You can see that here it's a little bit compact, so it's easier to read where the market direction is headed to, rather than, let's say, for instance, you go into a lower time frame. You see that we start experiencing a lot of noise, so it kind of gets a little bit difficult to read what the market is actually doing, because this somebody might consider this area, let's say, um this area right here as a downtrend, because 100% it is. If you check, it's breaking these lows, right? It's breaking these previous lows, it's breaking previous lows, and it's making lower highs as well, lower highs around there, lower highs. So somebody would be telling you that this is a downtrend. But then if you go on a higher time frame, it shows you that no, what's happening is just a consolidation range. That's what's happening. So I don't think there's much more to explain or anything, but just for recap um, purposes, it's these things are just it's just basic. It's really basic. Your downtrend is like this. Mm. This is your downtrend, right? Where you have, I want to mark each and everything properly. Where you have your lower highs, right? Um, you have your lower highs, and then on the downside you have your lower lows. Right, you have your lower lows there. Lower lows. And then for your uptrend, it's basically this highs, break a previous high, find a higher low, break the previous high. Oh my god, what is this thing doing now? Right, and then your uptrend, right? That's your uptrend, and then you have your consolidation range now. But in this video, I'm not really going into details about where you take your entries or anything like that, because of this is just a matter of introduction, right? So that you get the gist of different type of market conditions that are there, you know. So overall, the market can only move in those three directions. If you seeing it's on a downtrend, the most logical thing to do is what you should be taking sales, right? Because that's where there's more volume. You understand, there's more sellers in the market at that point in time. If it's an uptrend, you do likewise as well, you know. So make it a point that you learn all of those. I don't know what's going on with this thing, but yeah, I hope each and everybody understands. If you got a question, make sure you send those questions, comment, like, subscribe. um, Hit me up. Also, I'll be making it a point that I open an Instagram channel where people can actually communicate with me, but leave a comment. That would be much appreciated. Thank you so much.